What is going on, everybody, and welcome. Let me go ahead and take a look. Oh, yes, we are on. Excellent connection, and there you go. Please tell me in the comments if you can hear me well. I'm not in my studio, as you can tell. I'm at my break here at work, and what better thing to do is we chill with the entire fam. I'm gonna take a look at the comments here on my phone, as I always do, because I need complete and awesome look at what is about to occur. You're watching this video, guys. This is FOMC Live with Oscar Ramos. So let me take a look at. Yes, I can hear myself. Beautiful. Live chat is open. Will crypto Bitcoin pump today? Go ahead and tell me in the comments right now. We are extremely early. It's going to start at 1:30 p.m. But you know what's going to happen in about 20 minutes. We're going to get the decision of the FOMC, whether it's going to be a rate hike or a pause. So what's happening, fam? Oh, man. We're looking at the price of Bitcoin. We're looking at the price of different tokens. Let me go ahead and open CoinMarketCap here. I'm seeing right there on my phone right here, and everything looks good. Yeah, everything looks good. Perfect. Guys, Solana is doing a number. Solana is $42, everybody. Cannot believe it. Let me put my phone somewhere where I can see it better, the comments. That's better. There you go. We have Manny, Mr. Tanker, Kathleen. Welcome, welcome. Guys, Solana, are you seeing this? Dude, that is insane. That is really amazing. And who has Solana here? Who has Solana here? Incredible stuff. Incredible stuff. Welcome, welcome. So if you're just getting here, we're about to start. FOMC meeting coming up. I'm already in the live. As you can tell, I'm muting because they always put some music and it's copyrighted, as always. We are 35,000, everybody. A couple hours ago, I made a video for you earlier today because I wanted to tell you that Bitcoin wants to break out. Bitcoin wants to break out. So once the FOMC starts, I'm going to shut up and I'm going to just listen with you and enjoy. If you've been in some of the FOMC here with me, you know how this rolls, right? So excited. Any questions? Let me know, guys. We're chilling. I'm stretching a little bit. It's always fun when you are out of the office for a little bit, you know. And I already ate. I got my water. I'm ready for whatever is to come. Double up with Solana rise. Kudos, John. Kudos, kudos, kudos. Rate hike is coming. Will help to pump the crypto. Who knows? Paul, that is going to be a pause. 98% said pause based on the research that we had. So anything unexpected, obviously, is going to be giving some unexpectancy, uncertainty, volatility. So super excited for what's to come, right? Guys, also, we have SafeMoon. What? SafeMoon is indicted. I saw that earlier on Watch Your Guru. Watch Your Guru. Take a look at this. Government arrest SafeMoon founders. What happened? SafeMoon SEC charges SafeMoon. I am telling you, I've never bought SafeMoon. Never. Whew. Crazy stuff, right? Paul, anytime, Paul. I'm here for you. No worries. Not gonna lie, that looks like a dip. Will Shiba Inu ever pump? It will pump. And you better be ready. Look, whatever happens here, we're gonna capture it. We have the price. We have the live. We have everything. And all the different notifications for us to know. This is gonna be a fantastic FOMC meeting, and let me tell you why. The previous one in September, which actually I was here, you can take a look at the lives. I was here doing the live, not in my office, and we had a pause. The price wasn't doing much, just dump a little bit, like about less than 1%, And after that, the price later on in the days after started pumping. Guys, you remember October. So that was a September FOMC. We waited about a couple of weeks. Then in October, it came. The massive pump came in October. So realistically speaking, in November after this FOMC, we can have a nice, delicious pump. Hence the question, will crypto Bitcoin pump today? Maybe not, but in November, there's a high possibility because the pattern Bitcoin has right now is bullish, and I'm ready for what's to come for Bitcoin, right? And today, it's going to be a really good day for us to analyze how inflation is really still important or not for crypto, right? So it's gonna be exciting. Satoshi, dude, for real, doesn't sound safe. Safe moon, right? What do you think about algorand? Own it. It's a good one for sure. So Solana doing a number right here. Take a look at this. From $31. From $31 to $32 at the end of October, all the way to 1st November today. Amazing. You know, I am one of those who has STEPN, and I'm sure that you guys are aware of STEPN, right? That it's one that you walk is a move to earn, and it's all about Solana. So seeing Solana going higher, it's a great relief because there's so many projects that did really well but crash, everybody, with the bear market of 2022 and still a little bit of 2023. So we really want to have a good Solana price for everybody to make everybody happy and see our prices rally to the moon. That's what we want. Welcome, guys. Don't forget to smash the like button, guys, and consider subscribing to the channel. Oscar Ramos giving you the latest updates right now with the FOMC coming up soon. We have our soon to happen decision by the Jerome Powell. Usually comes at 1 p.m. So 1 p.m. they will release it to the world, and that's why I'm showing the price of Bitcoin, because that's the one that I'm sure is going to give us some volatility. So Solana, which I have it right here. Where are you, Solana? Here it is. Oh my gosh. Wow. Amazing. Now I can tell by how much it crushed. From the 31st, it did 15%. A lot of Solana whales are buying, baby. And that could be because FTX is getting much better. I'm telling you right now, I make it publicly. I'm never going to buy FTT again. Never going to buy FTT. I'm not really trusting the company. But some people are buying. And that's one of the reasons maybe it's really doing a number right here with us. Solana is doing, no, I'm not getting involved in FTT ever again. I never really had a lot of money there, but I don't like what's happening. So, but Solana is doing a massive number, which is insane. You're seeing it right now on the screen, 15%, which is exciting. What do you think with Solana keep pumping to all new time highs? You're talking about what, $300 Solana all time high or so? Look. When it comes to DeFi Solana, when it comes to building on Solana, we know that the blockchain shut down various times. We know they had some issues and FTX affected them a lot. So if they are able to fix that, I am not at all negatively viewing this as a it's dead, it's over, right? I don't know if you've been checking X, but there's a lot of people saying Solana is dead, but in a very sarcastic way, meaning Solana is not dead, right? So obviously let's take a look at the volume. Solana has an 88% volume, guys. People are buying it. People are buying it massively. Right now, in the last 24 hours, Solana beats Near Protocol. Aave doing well. Uniswap doing well. 28, 29% in the last 7 days, completely destroying so many different projects. Beautiful. Amazing, guys. Meanwhile, Ethereum 1800, Cronos 6, BNB 224, XRP 60 cents, Shiba Inu 5076. And Bitcoin looks like this, right? Bitcoin looks like this. So as of right now, things are moving ahead for crypto space. $35,000, everybody. That's the price to beat. And if today we get something unexpected with the FOMC, I guarantee you, prepare for some good volatility, because it's going to happen. 125 votes already, everybody, very early in the live. 75% people say, yes, we're going to have something going on today. And why? Well, if today we also get something about the Bitcoin ETFs, that is super guaranteed. Just yesterday, guys, I shared this on my Twitter, which, by the way, you're more than welcome to do it. Just yesterday, this happened. News: Invesco and Galaxy Spot Bitcoin ETF BTCO has been listed to the DTCC website. Approval is imminent, everybody. More approvals are coming. Take a look at this one too. Breaking: PayPal just got approved to offer Bitcoin and crypto services in the UK. More approvals coming. So just know, guys, that it's not stopping. It's not stopping. And we better have it all figured out right now, so we are putting ourselves in the best position possible. 8 minutes away. 8 minutes away for the decision. Welcome. How's everybody doing? Let me know in the chat how you guys are feeling. Definitely bullish. New month. October is over. But it was a great one for us, I think. It was a really, really good one. People are already jumping in, and if you are part of crypto, this affects you. The FOMC always affects you. Solana is not dead. I completely agree. What's going on, T? Happy to see you. I don't think raising or not rates by 25 points will have much effect on Bitcoin. The rates are already high, so 0.25 doesn't mean much. And I do agree with you, right? It means a lot to these regional banks. Remember that when they started raising by 75 basis points, we had some bank failures. And what happened? They started bailing them out. Crazy, right? They bailed them out fast. But no, not for crypto companies. It seems that nowadays crypto companies are only getting sued. Never helped. It is what happens, guys. But at some point, we are gonna have a very much, really relatively big change in the economy, and when the blockchain industry really pumps up, oh man, we're this close of trillion level asset managers having their hands with a brand new Bitcoin ETF. And when that happens, you can only imagine the impact is going to occur in the world, not only in the US. The SEC, even Gary Gensler celebrated 15 years Bitcoin, the Bitcoin paper, this week. So can't believe it, guys. It's going to really take us somewhere else. So you better get some Bitcoin pre-halving and pre-Bitcoin approval. About 5 minutes left for the decision on the FOMC, whether it's going to be a pump or a dump. And I'm sure that you guys are excited for what's to come. Most people expect a pause. So that will maybe not change much the price, but we'll see. One that is absolutely skyrocketing. Solana. Guys, are you seeing this? Oof. Who bought? Wow. Wow, great job, Solana. 20%. That is incredible. Wow, that is incredible. I need to go to the 4 hours. Starting October 30th all the way to today, 33% Solana is sending. Look at that. Wow, this is awesome, fam. Really, really happy. Really, really happy for Solana. I'm genuinely happy for all the Solana fam because there's a lot of people who really suffer with Solana, you know? All the cryptos are manipulated, right? All the cryptos are manipulated. So the fact that this is happening, it's for everybody to be like, well, let's maybe take some profits. Wow. Good job, Solana. My lord. Don't forget to smash the like button, everybody, and consider subscribing to the channel as we're about to wait for the decision that we are gonna get for the FOMC meeting. And obviously, we always wait for the press conference and we wait for what Jerome Powell has to say. While we're seeing a massive pump on Solana, I think it doesn't get any better than this. It doesn't get any better than this, guys. Pumptober. Oh, no. Pump November. It's hard for me to say that. Hard for me to say that. Still going. Everybody type Solana in the chat. Let's help Solana out. Solana. There you go. Love that. I'm trying to do the best I can with this MacBook. Trying to do the best I can with this work computer, fam. I'm not in my studio as always. Do you think Bitcoin will go to 45,000 by November? Oof, that's a big question. Guys, let's break Solana. I can't believe it. It's leaving everybody in the dust. It's leaving everybody in the dust, Solana. Can't believe it. Oh, no way. It's still sending, fam. Solana is sending big league right now. And it's only Solana. Oof. That is something. Can it go to 45? Oof. That's something good. Some people are eating today. Some people are really buying today. I'm so happy. Let's go, guys. Solana is pumping. You're seeing it live. You're seeing it live. New millionaires are created. You're right. New millionaires are being created right now, guys. Just don't forget, to become a millionaire, you actually have to sell. FY. You're not gonna get that money just sent to your bank if you keep holding. FY. Wow, that's amazing. You have zero Solana. I have just a few Solana. I don't have much, so don't feel bad. Don't feel bad. But this has to be something people know at a level when it comes to FTX, I'm sure. Oh! Wow, this is gonna be a good FOMC. Wow, in the world. That's something. That's something, guys. Check Solana on X. It's all there. Yeah, now it's coming down a little bit. That's coming down a little bit. 1 p.m., guys. It's 1 p.m. now. Decision. Let's come to X. Can't believe it. Solana breaking, Solana breaking, Solana breaking. Here it is. FOMC. Breaking news. Pause. There you go. No interest rate hike. Pause. Whew. Wow. No interest rate hike, everybody. No interest rate hike. Wow. Welcome, everybody. Happy to have you here. Don't forget to smash the like button and consider subscribing. Oscar Ramos in the chat, bringing you the latest news, how Solana is exploding, literally. How the FOMC, as of right now, we have heard no interest rate hike again, with that is bullish. Bitcoin. How's Bitcoin reacting a little bit? So far, Bitcoin is not moving. Bitcoin is staying steady. Bitcoin is staying steady. Let's go back to the party, right? Solana, baby. Oof. How's everybody doing? Welcome. No hike, that's why I bought it. Wow. Taking a look at the comments right now. I'm just here to support Oscar live. Thank you so much, buddy. Appreciate it. Eat. Remember, it's all hope. Maybe possible. All your questions can be accurate on the flip of a coin. No one knows. Let's pump XRP. Let's pump everything, right? Whew, guys. Well, we have Ian here already talking. So in about 28 minutes, fam, we are gonna have the press conference now that we know no interest rate hike happen. Let's go to the latest. Federal Reserve pauses interest rate hike, remains on 5.25 to 550. 98%, remember, 98% that we talked 2 days ago. No rate hikes. No rate hikes. Okay, very good. Very good. Yes, this was, markets are expecting a rate hike in November, no rate hike. So now you're aware of all the details and exactly what was going on. We're gonna hear the press conference in just a minute. But first, why don't we go ahead and take a look in Solana. Everybody's using the hashtag. Wow. Well, fam, good job. I mean, people are eating. People are really having fun. Now, if you come to the week, you're going to see that the last weeks for Solana have been amazing. And the last time Solana had that price was August 2022. The last time Solana was at $44 was August 2022. So what's going on right now? It's very important in Solana keeping dominance. Look at this week, previous week, the previous week, just exploding from about 14 bucks all the way to $45. Great job, Solana. People are buying and whales are coming in, and longing, shorting. So don't forget that it doesn't mean that it's gonna stay at that price forever, but it's a good opportunity to make some money on the go. Make some money on the go. JB, happy to have you here, buddy. Welcome, welcome. You're not too late for Solana, bro. It was over $100. Solana was over $100. I need to bring my iPad because I need another screen. I have my phone, I have my computer. I need another one to check more stuff. I'm gonna do CoinMarketCap here too. So Solana, highest price for Solana was that I have here, November 7th. The price for Solana was $239 to $250. So buying Solana at $40, you're still good if you're looking at a bull market scenario. Wow, really good. Bitcoin at 34,500. Let's go ahead and look at this a little bit better. There you go. Well done, fam. Well done. Just about 25 minutes for this to kick off and see what is happening for us. But as of now, things remain steady for Bitcoin. Things remain steady for Ethereum. The only token that's doing a number on all of us is going to be Solana. TIA, Celestia is also moving here. Injective is also moving here. But Solana really is like super weird, right? Sometimes Solana wasn't doing anything. Oh, Cronos has a less than 1% on the 24 hours. So all Cronos holders, we're positive, right? We're not down. That's important. We need a massive pump, and the ETFs are about to be approved and announced. JB, we need a massive pump indeed, brothers. $40 to the 15 before. LOL, miss it. Yeah, I know it went fast, very, very quickly. Crypto Vibe says it's like when Ethereum was $80, Solana will do the same thing. You think XRP can get between 7 and 10 dollars? Solana, XRP first has to pass that $1, which shouldn't be hard at all. And then XRP should be looking at least $3 in a bull market euphoria scenario. No problem. Yeah, I'm seeing it. XRP is one of those that is going to bring so much value to the companies that are not yet on crypto that people will want to just own more of them. That's it. They need to own more. Do I have Twitter here? Nope. Okay. It's alright. I know what I'm gonna do. Let's take a look at Solana as nothing moves right now. Bitcoin, the dominance going down from 54s to 53. Why is that? Well, part of it is going to be because Solana is exploding and the dominance is not on Bitcoin, it's on Solana, right? So the highest price as of right now was 44.85. So Solana couldn't reach $45. Like I said, it's been over a year since Solana wasn't in this price level, which is awesome. We always want Solana to do massively, and any other altcoin, right? That's the idea. That's the idea for us. Celestia's successful mainnet launch and airdrop has led to making the token being discussed at the highest increased frequency today, right behind price pumps for Solana, Status, and Terra. Everybody watching Solana pump right now. Joe Rogan. Amazing. Amazing. Watch Your Guru has something for us, and that is pauses interest rate hike, remains at 5.25, everybody. That is the story. I'm gonna go ahead and post this one here in the chat, and I'm gonna pin it so everybody knows. Welcome, welcome. There you go. Let's go back. Let's go back here. Nice. Don't forget to smash that beautiful like button, everybody, to get more people in the chat as we wait, which it should be right now about 20 minutes for this press conference to start. Always like to listen and analyze what's ahead in the markets, in the economy, with inflation. As we know, let me show you. Core inflation rate should be this one. As we know, everybody, that core inflation is what Jerome Powell looks all the time. We have gone from 6.3 exactly a year ago all the way to 4.1. That is good. Now, if in November for October we get a 3.9, that's amazing. At that point, there's a much higher probability of another pause in December's FOMC, because we still have this one. So today this one is happening, right? And on mid-December we're having one more. So just to give you an idea, we have gone through all of this 2023 FOMC meetings together with a bunch of rate hikes, no cuts, and a few pauses. A lot of great things coming up, for sure. Oscar, when do you think the ETF will be approved? That's a great question. We talked about it a little bit earlier this week, how AB Research says January the 10th. They're thinking about it's very likely to have a response. January the 10th. Yes, it's on X, it's on Twitter. It's visible, public, how there's already some asset managers thinking and saying that we're gonna get a really good response on the ETFs. If you are here because you like pumps, believe me, that is the reason why Bitcoin is gonna jump. And that's why we're looking at it right now live. We're looking at it right now live. Ah, baby, love it. Welcome, welcome. Cheers to everybody watching. Where are you guys watching us from? I'm here in Texas. Always love, because we have so many people from all these different places, and it's crazy, but we're the early ones. And I noticed we have over 200 people, close to 300. And remember months ago when it was bearish, we had barely 100. So just to give you an idea that what we're doing here is not a mistake. What we're doing here is and has a future for our financial freedom. It's gonna get very crazy as we wait for the upcoming bull market. California, Netherlands, Romania, Atlanta, Finland, Arizona, Singapore, Netherlands, Russia. You see, that is exactly where the fam is. We're multinational here. We're all from all different places. All different places. And that's what makes crypto super special. because if you really want adoption, you gotta accept everybody. You have to open the borders to adoption of crypto and Bitcoin. That is the reality of this new technology, right? Because there's gonna be communities who may don't like you, but just look around and you will find great people out there. That's for sure. As of right now, things remain green, things remain positive. That's I think what I really, really like to see. And as I've already explained with the core inflation rate, that might be the case why he decided a pause. The entire committee decided on a pause. Let's go back to Solana, see where Solana is. So, isn't it fun, guys? Isn't it fun how at 1 p.m. Solana stopped pumping? Why? Well, I think you know why. Because of obviously the decision by the Fed. A lot of the times people utilize these events to pump or hype things up, and they decided to use Solana in this case. It's gonna be difficult for Solana to break over that 44.85. Not impossible, but challenging. Oscar, when Crow hits $1, will there be a Crow fan party? And I love when people remind me of that. Of course, that's a promise I've made to all the Crow fam. For those who don't know, I've said months ago that when Cronos Crypto.com token, right, CRO, which right now is 6 cents, but it was at 99 cents years ago, when Crow gets to $1, the idea is to launch and put up a nice party for anyone to join and enjoy with the Crow fam. So I still am looking at the logistics on that. That's why I need to make a lot of money in these times, right? Because I am financing that party. So should be exciting. And anyone helping, that's gonna be an honor. So yes, thanks for letting me know for sure. Tectonic, so massive blast. We're waiting on Tectonic for sure. About 13 more minutes, guys. 13 more minutes for the FOMC to start. And what I thought at 117, it's happening. The price of Solana has slowed down, but don't think that it's over for Solana. Don't think that it's over for Solana. It is not. But it was super evident. Let me do the 5 minutes. It's super evident. Like this is 12:55 p.m. and this is 1 p.m. Like immediately at 1 p.m. down. That is the definition of there you have it. I mean, there you have it. Very good. We are waiting on Bitcoin. Let's move to the 1 hour. That's much better. Bitcoin, you went to $35,000 earlier today. What are you going to do now that we have this and during the FOMC meeting? Finland, what's going on, guys? Trying to get the icy white card. Pump, Crow, pump. It's true. It's true. You have 33,000 cross token transferred due to incorrect network. Anyway, to fix that, please go ahead and reach out to the crypto.com DeFi customer support. They're going to be the ones able to help you out. Go ahead on Twitter, on X. You're going to get some support there. I think whatever graph you have is off. Bitcoin never hit 35K today. It's in just a few charts. The one that you're looking might not show it. Not all of them show it, but it does. It was extremely fast. Maybe it's not even on CoinMarketCap. Look, you see, on CoinMarketCap today, the first, it says 34,977. So yes, some of them won't show it, but on some other markets and pairs, it did. That's why when you take a look at the prices on crypto.com oftentimes has higher prices. Manipulation. Of course, ally. My pleasure. Yeah, I mean, these are great things to know because a lot of the times, and this is not financial advice, right? Let me be clear. But a lot of the times, people do what we call arbitrage. And arbitrage is buying it lower and selling it higher, right? So, but that happens in a few cases. I'm getting a lot of notifications, and I'm gonna pause them all here on other applications I have because we're about to start something fun, and I don't want people to bother me or us. Beautiful. Let's see how we're doing here. Perfect. All right. And let's get and say goodbye to the ones that I'm not using. There you go. We're back. 9 minutes left for me to shut up. We have also my friend Zach live, which is awesome. Kudos to Zach and Austin Hilton. Great people. Rodney from My Crypto Journey is already, he's very into the scams and the controversy, the drama. So if you like that, obviously go ahead and take a look at his channel. Breaking, the Fed has announced no pause, no rate hikes. So good stuff. That is what everybody's looking at as of this time. And this is the one that I showed you earlier today, guys, that SafeMoon charged and its executive team with perpetuating a fraudulent scheme through an unregistered security sale. That's why it's super important, everybody, to buy projects that you know they're doing things right. And guess who is doing things right? Guess who? And there's a far chat. There's a far chat right now in Hong Kong FinTech Week. They're the Gold Plus sponsor. Where's the Crow fam right now? Say hi and tell me the comments right now. Where's the Crow fam? The ones who are holding with me, the soldiers, the warriors, the brave people. Holding till $1 plus. Because we know it's going to happen. If people are bullish on XRP, Ethereum, Bitcoin, Solana, and so one of the best exchanges in the entire world, with an amazing blockchain called Cronos chain, we matter. And I believe it's not over. It's not over. I know Binance has a huge advantage over us. A lot of people love it, use it. But Crypto.com is putting itself in a great position, everybody. And if you're here watching from the Crow fam, I'm so happy you're here. We always say it like it is. We always say it like it is. There's the fam. Pack us out in the house. Joshua, Dark, Manny, Dennis. That's what's going on, fam. So we need to make sure we do things the way they're supposed to. I'm always getting so many notifications on this computer. I'm happy that I'm able to do the live. It's crazy stuff. 6 more minutes, everybody, for me to shut up and listen. And as you know, this takes a while, so most of us, we love to listen, we love to enjoy. I'll be typing my answers to your questions, and I'll be going over many things. Obviously, it takes a while, and the price of everything can change. The last time, and most of the times that I do this, the price goes down. So if we go to 34 and 100 or 33, do not even be concerned. It happens all the time. all the time. Very good. Everything looks decent right now. A lot of people waiting, a lot of people excited. So cool, fam. Just woken up. I'm night shift. Sorry, been missing your lives, Oscar. No worry. Back. Super happy to see you here. Joined Crow fam back in 2022 when prices were high and have been slowly accumulating Crow since almost 4K stake in DeFi. Good job, buddy. I think we're not making a mistake here. We're not making a mistake here. Algorand also going. That's awesome. Super happy. Super happy to hear that. Favorite altcoin? It's gonna be between Cardano, XRP, and Cronos. It's just so much utility. It's hard to pick. So much utility. So we still have the poll, if I'm not mistaken, everybody. So you might want to take a look at it. What's gonna happen? Pump, dump? I think so. Should be there. If you don't see it, then weird. Yes, it's still there. 369, 60, 70 votes, 76% winning. Well, as of right now, Solana is the one that really did a number on us. Solana is the one that did a number on us. So, good job. Sushi pumping, Caspa. That's what we like to hear. But as of right now, Bitcoin in the last 4 hours has gone from 34,100 all the way to 34,500. So it's just steady moving and waiting, steady moving and waiting. Oh, Solana is coming back up. Solana. You see, I mean, there's a battle right there. It's a battle royale. DCAing for the last couple of months. Right now. Very good. You got lucky and screwed up some Solana when it was under 10 bucks. Oh, dude. So happy for you. Joshua. That's really, really good. You're making some good money. Oh, no. Are you kidding me? Are you kidding me? Guys. Oh, it just broke the high. Oh. 45. Wow. We are about to start the FOMC meeting and this happens. Love it, dude. Well, I think the crypto pump, you guys, with all of your votes, it's happening. Keep voting because this is what's going on. Send it. Question. And I'm gonna see it. What would you like to see the most on the left hand side of the screen, Solana or Bitcoin? Go. What would you like to see the most, Solana or Bitcoin? The price charts. Although I think I know the answer. 1 minute. 1 minute. I see more Bitcoin. All right. I see more Bitcoin. I see more. Good job, guys. Good job. We'll see the two of them, but mostly Bitcoin. That is amazing. Dude. Can't believe it. All right, fam. It's going to be 130 now. Where's the price of Bitcoin here? Oh, it's also going up. Okay. I'm going to put Bitcoin right now for a second, okay? It's pumping. Things are pumping right now, guys. Don't forget to smash the like button, everybody, and consider subscribing. Let's get all ready. Listen up. It's 1:30 p.m. Let me refresh. Here it is. I am going quiet and just responding to comments, okay? As soon as he starts. Thanks so much for being here, and let's listen, see what's going on with the economy, why they paused rates, and I'll be changing some of the charts and listening to your comments.
Good afternoon, everyone. Welcome. My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. We understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Since early last year, the FOMC has significantly tightened the stance of monetary policy. We have raised our policy interest rate by 5.25 percentage points and have continued to reduce our securities holdings at a brisk pace. The stance of policy is restrictive, meaning that tight policy is putting downward pressure on economic activity and inflation, and the full effects of our tightening have yet to be felt. Today, we decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Given how far we have come, along with the uncertainties and risks we face, the committee is proceeding carefully. We will make decisions about the extent of additional policy firming and how long policy will remain restrictive based on the totality of the incoming data, the evolving outlook, and the balance of risks. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a strong pace and well above earlier expectations. In the third quarter, real GDP is estimated to have risen an outsized annual rate of 4.9%, boosted by a surge in consumer spending. After picking up somewhat over the summer, activity in the housing sector has flattened out and remains well below levels of a year ago, largely reflecting higher mortgage rates. Higher interest rates also appear to be weighing on business fixed investment. The labor market remains tight, but supply and demand conditions continue to come into better balance. Over the past 3 months, payroll job gains averaged 266,000 jobs per month, a strong pace that is nevertheless below that seen earlier in the year. The unemployment rate remains low at 3.8%. Strong job creation has been accompanied by an increase in the supply of workers. The labor force participation rate has moved up since late last year, particularly for individuals aged 25 to 54 years, and immigration has rebounded to pre-pandemic levels. Nominal wage growth has shown some signs of easing, and job vacancies have declined so far this year. Although the jobs to workers gap has narrowed, labor demand still exceeds the supply of available workers. Inflation remains well above our longer run goal of 2%. Total PCE prices rose 3.4% over the 12 months ending in September. Excluding the volatile food and energy categories, core PCE prices rose 3.7%. Inflation has moderated since the middle of last year, and readings over the summer were quite favorable. But a few months of good data are only the beginning of what it will take to build confidence that inflation is moving down sustainably toward our goal. The process of getting inflation sustainably down to 2% has a long way to go. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. As I noted earlier, since early last year, we have raised our policy rate by 5.25 percentage points, and we have decreased our securities holdings by more than $1 trillion. Our restrictive stance of monetary policy is putting downward pressure on economic activity and inflation. The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue the process of significantly reducing our securities holdings. We are committed to achieving a stance of monetary policy that is sufficiently restrictive to bring inflation sustainably down to 2% over time, and to keeping policy restrictive until we are confident that inflation is on a path to that objective. We are attentive to recent data showing the resilience of economic growth and demand for labor. Evidence of growth persistently above potential, or that tightness in the labor market is no longer easing, could put further progress on inflation at risk and could warrant further tightening of monetary policy. Financial conditions have tightened significantly in recent months, driven by higher, longer-term bond yields, among other factors. Because persistent changes in financial conditions can have implications for the path of monetary policy, we monitor financial developments closely. In light of the uncertainties and risks and how far we have come, the committee is proceeding carefully. We will continue to make our decisions meeting by meeting based on the totality of the incoming data and their implications for the outlook and for economic activity and inflation, as well as the balance of risks. In determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below potential growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Let's go to Howard.
Howard Schneider with Reuters. Thank you, Chair Powell, for doing this. To what you referenced the rise in long-term bond yields, to what degree did that supplant action by the Fed at this meeting?
Thanks for your question. So I'll talk about bond yields, but I want to take a second and just sort of set the broader context in which we're looking at that. So if you look at the situation, let's look at the economy first. Inflation has been coming down, but it's still running well above our 2% target. The labor market has been rebalancing, but it's still very tight by many measures. GDP growth has been strong, although many forecasters are forecasting, and they have been forecasting, that it will slow. As for the committee, we are committed to achieving a stance of monetary policy that is sufficiently restrictive to bring inflation down to 2% over time. And we're not confident yet that we have achieved such a stance. So that is the broader context into which the strong economy and all the things I said, that's the context in which we're looking at this question of rates. So obviously we're monitoring, we're attentive to the increase in longer term yields, and which have contributed to a tightening of broader financial conditions since the summer. As I mentioned, persistent changes in broader financial conditions can have implications for the path of monetary policy. In this case, the tighter financial conditions we're seeing from higher long-term rates, but also from other sources like the stronger dollar and lower equity prices could matter for future rate decisions as long as two conditions are satisfied. The first is that the tighter conditions would need to be persistent, and that is something that remains to be seen. but that's critical. Things are fluctuating back and forth. That's not what we're looking for. With financial conditions, we're looking for persistent changes that are material. Second thing is that the longer term rates that have moved up, they can't simply be a reflection of expected policy moves from us. That we would then, that if we didn't follow through on them, then the rates would come back down. So, and I would say on that, it does not appear that an expectation of higher near-term policy rates is causing the increase in longer-term rates. So, in the meantime, though, perhaps the most important thing is that these higher Treasury yields are showing through to higher borrowing costs for households and businesses, and those higher costs are going to weigh on economic activity to the extent this tightening persists. And the mind's eye goes to the 8%, near 8% mortgage rate, which could have pretty significant effect on housing. So that's how I would answer your question.
Just as a quick follow-on to be clear on this, in your opening statement and just now, you seem to imply that you are not yet confident that financial conditions are restrictive enough to finish the fight. Is that true?
Yes, that's exactly right. To say it a different way, we haven't made any decisions about future meetings. We have not made a determination, and we're not. I will say that we're not confident at this time that we've reached such a stance. We're not confident that we haven't. We're not confident that we have, and that is the way we're going to be going into these future meetings, is to be just determining the extent of any additional further policy tightening that may be appropriate to return inflation to 2% over time.
Gina.
Hi, Chair Powell. Thank you so much for taking our questions. I wonder, if you don't raise interest rates in December, would the presumption be that at that point that we should expect that rates are at their peak, or is there a possibility of restarting rate increases next year? And are there any costs to taking a more extended pause?
So let me start by saying we haven't made a decision about September. You're asking a hypothetical there, but we're going into the December meeting. We'll get, as you know, 2 more inflation readings, 2 more labor market readings, some data on economic activity, and so we'll be taking, and also the broader situation, the broader financial conditions situation, and the broader world situation. We'll be looking at all those things as we make a decision in December. We haven't made that decision. I would say, though, that the idea that the idea that you would be difficult to raise again after stopping for a meeting or two is just not right. I mean, the committee will always do what it thinks is appropriate at the time. And again, we haven't made any decisions at all about December. We didn't talk about making a decision in December today. Really, it was a decision for this meeting and understanding broader things.
Nick Timmeros of the Wall Street Journal. Chair Powell, did the Fed staff put a recession back into the baseline forecast in the materials for today's meeting? And how much does this tightening in financial conditions substitute for rate hikes if the tightening is persistent? You had said it was worth maybe a quarter point when we had the bank failures in the spring. What is it here on something that's presumably more straightforward and more familiar to simulate?
So I guess I don't want to answer your question about the recession, but the answer is no. I think I have to answer it since we did publicly say in the minutes. You'll know anyway in the minutes. The staff did not put a recession back in. I mean, it would be hard to see how you would do that if you look at the activity we've seen recently, which is not really indicative of a recession in the near term. In terms of how to think about translation into rate hikes, I think it's just too early to be doing that. And the main reason is we just don't know how persistent this will be. You can see how volatile it is. Different kinds of news will affect the level of rates. And I think any kind of an estimate that was, precise would hang out there and have a great chance of looking wrong very quickly. So I think what we can say is that financial conditions have clearly tightened, and you can see that in the rates that consumers and households and businesses are paying now. And over time, that will have an effect. We just don't know how persistent it's going to be, and it's tough to try to translate that in a way that I'd be comfortable communicating into how many rate hikes that is.
If I could follow up, I guess what makes you confident that tighter financial conditions will slow above trend growth when 500 basis points of rate hikes, QT, and a minor banking crisis have not thus far?
Well, that's the way our policy works is, and sometimes it works with lags, of course, which can be long and variable. But ultimately, if you raise raise interest rates, you do see those effects, and you see those effects in the economy now. You see what's happening in the housing market. You're seeing that now. You'll see. If you look at surveys of people, it's not a good time, they think, to buy durable goods of various kinds because rates are so high now. I mentioned again, we're getting reports from housing that the effects of this could be quite significant. But you're right. This has been a resilient economy, and it's, I think, been surprising in its resilience. And there are a number of possible reasons why that may be. Our job is to achieve maximum employment and price stability, and so we take the economy as it comes. It has been resilient, so we take it as it is.
Colby. Thank you. Colby Smith with the Financial Times. In terms of the thresholds that you've laid out of what could warrant further tightening, the additional evidence of persistently above trend growth or some kind of reversal in the recent easing of labor market tightness, that seems to suggest something more powerful than just one more quarter point rate hike would be necessary. And I'm just curious if that's how the committee sees it.
So we've identified those factors. Those are not meant to be the only factors or a specific test that we're going to be applying with some metrics behind it. Really, we're going to be looking at the broader picture. And what's happening with our progress toward the 2% inflation goal. Is the labor market continuing to broadly cool off and achieve a better balance? We'll be looking at that. Growth, we look at growth insofar as it has implications for our 2 mandate goals. We look at that. And we look at broader financial conditions. So we'll be looking at all of those things as we reach a judgment, whether we need to further tighten policy. And if we do reach that judgment, then we will further tighten policy.
Okay. And just in terms of the tightening of financial conditions, if that is having some kind of offsetting effect in terms of the need to potentially, again, raise rates, what then is the potential impact on the trajectory of rate cuts? Could we see those maybe pulled forward or have to see more than what the September SEP indicated?
So the fact is the committee is not thinking about rate cuts right now at all. We're not talking about rate cuts. We're still very focused on the first question, which is, have we achieved a stance of monetary policy that's sufficiently restrictive to bring inflation down to 2% over time, sustainably? That is the question we're focusing on. The next question, as you know, will be, for how long will we remain restrictive? Will policy remain restrictive? And what we said there is that we'll keep policy restrictive until we're confident that inflation is on a sustainable path down to 2%. That'll be the next question. But honestly, right now, we're really tightly focused on the first question. The question of rates cuts just doesn't come up because I think it's so important to get that first question, as close to right as you can.
Steve Leisman, CNBC. Mr. Chairman, I guess I had assumed that there was a tightening bias in the committee. You say in the statement you're looking to assess the appropriate stance of monetary policy, the extent to which you may need to hike additionally. You didn't say earlier that you were sufficiently restrictive. There were forecasts for 2 rate hikes among most members of the committee. But then you just said that, we haven't made a determination. Would you say the bias right now is neutral, that there is no disposition to hike again, and that the committee largely has moved off of this forecast for 2 hikes? Or for one additional hike?
I think you're talking about one additional.
Yeah,
I wouldn't say that at all. I would say, the language, looking at it here, in determining the extent of additional policy firming that may be appropriate to return inflation 2% over time, that's the question we're asking.
So is it right to think of that as a hiking bias is still in the committee here?
We haven't used that term, but it's fair to say that's the question we're asking is, should we hike more? It's not, and that is the question. And you're right that in September, we wrote down 1 additional rate hike, but, we'll write down another forecast, as you know, in December.
Chris.
Thank you. Chris Rugaber at Associated Press. Since the last meeting, the auto workers' strike has finished. Oil prices have leveled off. And yet, on the other hand, you have the outbreak of war between Israel and Hamas. How do you see all those factors taken together affecting the economy going forward? How are you thinking about those?
So there are significant issues out there. As you point out, global geopolitical tensions are certainly elevated, and that goes for the war in Ukraine. It goes for the war between Israel and Hamas. We're monitoring that. Our job is to monitor those things for their economic implications. So the UAW strike, as you point out, appears to be coming to an end. Oil prices have flattened out. They haven't gone down, but I guess they've gone down a little bit from their earlier peak. Another one is the possibility of government shutdown. We don't know about that one. So there's plenty of risk out there. But I would go back to the bigger picture from our standpoint is we've got a very strong economy, strong labor market, making progress on the labor market, making progress on inflation, and we're very focused on getting confident that we have achieved a stance of monetary policy that is sufficiently restrictive. That's really our focus.
Great. And just one quick thing. You last month had gone to York, Pennsylvania, where you talked to last month, where you talked to a lot of small business owners. Just curious, what sentiments did you hear from them, or what did you picked up on, and was there anything that surprised you the most in terms of what they talked about?
I wouldn't say I was terribly surprised. I was very impressed by York as a town with a real strategy, and I would say it's very impressive what the people there have put together in the face of some difficult longer run trends about offshoring of manufacturing and that kind of thing. They've done a great job as a city, I think. What you hear, and is consistent there, which is people are really suffering under high inflation. You were there. We talked to some people who, were feeling that in their businesses, and other people who were feeling it in their home lives as well. It's painful for people, particularly people who don't have a lot of extra financial resources, who are spending most of their income on the essentials of life. So we know that wasn't new, but that did come through very clearly in the conversations we had in New York. And I walked away from that even, just thinking that we really the best thing we can do for the U.S. is to restore price stability. Fully restore price stability and not fail in that task, and do it as quickly as possible, but also with the least damage we can.
Rachel. Hi, Chair Powell. Rachel Siegel from the Washington Post. Thanks for taking our questions. You've spoken before about the pain that would likely be coming for the economy in order to get inflation down. But since the economy has not responded to rate hikes in ways that would normally be expected, have you changed your views on that at all, on how necessary or inevitable that kind of pain would be, say, for the labor market or overall growth?
Well, I think everyone has been very gratified to see that we've been able to achieve, pretty significant progress on inflation without seeing the kind of increase in unemployment that has been very typical of rate hiking cycles like this one. So that's a historically unusual and very welcome result. And the same is true of growth. We've been saying that we need to see below potential growth, and growth has been strong, but yet we're still seeing this. I still believe, and my colleagues, for the most part, I think still believe that it is likely to be true. It is still likely to be true, not a certainty, but likely that we will need to see some slower growth and some softening in the labor market conditions to get to fully restore price stability. So, but it's only a good thing that we haven't seen it, and I think we know why. Since we lifted off, we have understood that there are really two processes at work here. One of which is the unwinding of the distortions to both supply and demand from the pandemic and the response to the pandemic, and the other is restrictive monetary policy, which is moderating demand and giving the supply side time to recover, time and space to recover. So you see those two forces now working together to bring down inflation. But it's that first one can bring down inflation without the need for higher unemployment or slower growth. It's supply side improvements like shortages and bottlenecks and that kind of thing going away. It's getting a significant increase in the size of the labor market now, both from labor force participation and from immigration. That's a big supply side gain that is really helping the economy. And it's part of why GDP is so high, is because we're getting that supply. So we welcome that. But I think those things will run their course, and we're probably still going to be left, we think, and I think, we'll still be left with some ground to cover to get back to full price stability. And that's where monetary policy and what we do with demand is still going to be important.
Against that backdrop, if you've gotten any clarity on lags, if you have an economy that's been so resilient to high rate increases, does that suggest to you that there isn't necessarily this huge wave of tightening that's still coming through the pipeline and that it may have already come into effect?
You know, I continue to think it's very hard to say. So it's been 1 year at this meeting. 1 year ago, this was the fourth of our 75 basis points hikes. So that's a full year since then. I think we are seeing the effects of all the hiking we did last year, and this year we're seeing it. It's very hard to know exactly what that might be. But you can, for example, an example of where you wouldn't have felt this yet is debt that had been termed out. But it's going to come due and have to get rolled over next year or the year after. So, and there are little things like that where the effects are just taking time to get into the economy. So I think we have to make monetary policy under great uncertainty about how long the lags are. I think trying to get a clear answer and say, I'm just going to assume this, is really not a good way to do it. And this is one of the reasons why we have slowed the process down this year, was to give monetary policy time to get into the economy. And it takes time, we know that, and you can't rush it. So slowing down is giving us, I think, a better sense of how much more we need to do if we need to do more.
Michael McKee from Bloomberg Television and Radio. I'm trying to connect the dots here. One quick clarification I want to ask about Rachel's question is, you said you need slower growth. You had always said before a period of lower than trend growth. Has that changed? And two, it sounds to me like you're basically saying here that the dot plots out the window, that every meeting is live with the possibility of a rate increase for right now. It doesn't matter about the turn of the year, and that there's not an objective way to determine whether or not you've got enough tightening in the system. It's just going to be a subjective judgment meeting by meeting.
Well, so let's talk about the dot plot first. So the dot plot is a picture in time of what the people on the committee thinks is likely to be appropriate monetary policy in light of their own personal economic forecast. In principle, when things change, that's not like a plan that anybody's agreed to or that we will do. That's a forecast that would change, for example. I mean, many things could change that would cause people to say, I wouldn't write down that dot, 6 weeks later. Think of the number of things that could change your mind on that. So I think the efficacy of the dot plot probably decays over the 3-month period between that meeting and the next meeting. But nonetheless, it's out there, and we do personally update our forecast, but we don't formally update the dot plot. So, I think we try to be as transparent as we can about the way we're thinking about these things. We're laying out there our thinking, and as we approach the meeting, we'll all be, my colleagues and I will be talking about how we're processing that data. In terms of, we're not really changing the way, in terms of growth, what I said was below potential. So what you have here recently is growth that is temporarily, potential growth is elevated for a year or two right now over its trend level. So the right way to think about it is what's potential growth this year. People think trend growth over a long period of time is a little bit less than 2%, or I would say just around 2%. But what we've had is with the improvement in the size of the labor force, as I mentioned, through both participation and immigration, and with the better functioning in the labor market, and with the unwinding of the supply chain and shortages and those kinds of things, you're seeing actually elevated potential growth. There's catch-up growth that can happen in potential. And that means that if you could be growing at 2% this year and still be growing below the increase in the potential output of the economy. I hope that's clear. That's really what's going on. That's why I would say it as below potential.
But if you could clarify what I asked about meeting by meeting, are we essentially now supposed to assume that it's a meeting by meeting live meeting with a chance of a rate increase that will be decided on subjective criteria rather than objective at each meeting?
I mean, I don't know that I want to just accept anybody's characterization of it. I'll tell you how we're doing this. So we're going meeting by meeting. We're asking ourselves whether we've achieved a stance of policy that is sufficiently restrictive to bring inflation down to 2% over time. That's the question we're asking. We're looking at the full range of economic data, including financial conditions and all of those things that we look at. And then we've come very far with this rate hiking cycle, very far. And you saw the spread at the September meeting of, it's a relatively small spread of people think one or two additional hikes. So you're close to the end of the cycle. That was an impression a belief as of September. It's not a promise or a plan of the future. And so we're going into these meetings one by one. We're looking at the data. As I mentioned, we're also, we're being careful. We're proceeding carefully because we can proceed carefully at this time. Monetary policy is restrictive. We see its effects, particularly in interest-sensitive spending and other channels. So that's how I think about it.
Neil.
Thanks. Hi, Chair Powell. Neil Irwin with Axios. In light of the run-up in long-term yields we've seen the last several weeks, have you given any consideration to the pace of your asset runoff program? And if there were a judgment that the higher term premium was endangering the dual mandate goals, would that be reason to think about slowing or suspending QT, or should we think of that as more of a technical question around reserves?
So committee is not considering changing the pace of balance sheet runoff. It's not something we're talking about or considering. And I know there are many candidate explanations for why rates have been going up. And QT is certainly on that list. It may be playing a relatively small effect, although I would say at $3.3 trillion in reserves, it's not. I think it's hard to make a case that reserves are even close to scarce at this point. So that's not something that we're looking at right now.
Victoria.
Hi, Victoria Guido with Politico. I wanted to ask about the Basel III endgame capital proposal. You've gotten a lot of pushback from people on different aspects of the proposal, and you yourself expressed some reservations. And I'm just curious, could you accept finalizing that proposal without significant changes?
So that proposal is out for comment, and we expect a lot of comment. We won't get those comments until the end of, well into next year. We've extended the deadline, and we'll take them seriously. We'll read them. I'll say what I do expect is that we will come to, we're a consensus-driven organization. We'll come to a package that has broad support on the board.
So does broad support mean more support than the proposal had?
It means broad support.
Janelle Marte with Bloomberg. So in addition to persistence, when you look at long-term treasury yields, what else are you watching to evaluate how those tighter financial conditions are hitting the economy and if it will lessen the need for further tightening? Also, do you think that those higher yields could affect banking stress?
So what do we look at? We look at a very wide range of financial conditions. And in fact, as you'll know, different organizations publish different financial conditions indexes, which can have 7 or 8 variables, or they can have 100 variables. So there's a very rich environment, and we tend to look at a few of them. I'm not going to give you the names, but there are a few of the common ones that people look at. And so they're looking at things like the level of the dollar, the level of equity prices, the level of rates, the credit spreads. Sometimes they're pulling in credit availability and things like that. So it isn't any one thing. We would never look at, for example, long-term treasury rates in isolation, nor will we ignore them. But we would look at them as part of a broader picture. And they do play a role, of course, in many of the major standard financial condition indexes. Your second question was? Banking stress. So it's something we're watching. As you know, we did have, there were issues with interest rate risk and also, funding uninsured deposits in the things we went through in March and thereafter. And so we've been working a lot with financial institutions to make sure that they have good funding plans and and that they have a plan for how to deal with the kind of portfolio unrealized losses that they have. We do think the banking system is quite resilient. We had a handful of bank failures, but so that's what we're out there doing, and we don't have any reason to think that these rate hikes are materially changing that picture, which is one of a strong banking system and one where there's a strong focus by banks and by supervisors on liquidity, on funding, and those sorts of things.
Thanks, Mr. Chairman. Scott Horsley from NPR. Last week, you and your colleagues put forward a proposal to lower the cap on debit card swipe fees for comment. Could you just talk a little about the considerations there, what it would mean for merchants, for banks, for consumers, and also just what y'all are seeing in terms of the use of both debit and credit cards in the payment system?
So you're right. We put a proposal out for comment is what we did. And, this is a job that Congress assigned us, as you of course know, in Dodd-Frank, and all we can really do is faithfully implement the statute. That's all we're trying to do. What else can we really do? It's a 90-day comment period. We typically don't comment on these things once they're out for comment, and we do hope that stakeholders, and we know that they will use this opportunity to express their views. They haven't been shy about that. So that's critical, and that's what I can say about that now.
Thank you. Thanks, Chair. Edward Lawrence with Fox Business. So over the last 3 months, the year-over-year PCE inflation was at 3.4%, core well over 3%. You've said in the past 2% remains the Federal Reserve target, but with no rate increase today, how long would you be okay then with a 3% or 3% plus overall inflation?
The progress is probably going to come in lumps and be bumpy, but we're making progress. I think the core PCE came down by almost 60 basis points in the third quarter. So the best thing I could point you to would be the September SEP, where the expectation was that inflation by the end of next year on a 12-month trailing basis would be well into the twos, and the year after that further into the twos. So that's if you look historically, that's sort of consistent with the way inflation comes down. It does take some time, and as you get further and further from those highs, it may actually take longer time. But the good news is we're making progress, and monetary policy is restrictive, and we feel like we're on a path to make more progress, and it's essential that we do.
You've said in the past that doing too little on interest rates could take years to fix, but the cost of doing too much could be easily fixed. How robust was the debate about this pause on the doing too little side?
That's always the question we're asking ourselves, and we know that if we fail to restore price stability, the risk is that expectations of higher inflation get entrenched in the economy, and we know that that's really bad for people. Inflation will be both higher and more volatile. That's a prescription for misery, and so we're really committed to not letting that happen. For the first year or so of our tightening cycle, the risk was all on the side of not doing enough. We've come far enough that the risks have gotten more two-sided. You can't identify that with a lot of precision, but it does feel like the risks are more two-sided now. But we're committed to getting inflation back down to our target over time, and we will.
Simon Rabinovich with The Economist. Quick follow-up to the question about banking stresses. You talked about how the banking system is resilient. Of course, part of the resilience the past year stems from the Bank Term Funding Program that you launched in March. Given that bond prices have not recovered, that unrealized losses are probably mounting, how likely is it that you might have to extend that program in March next year?
Good question. We haven't really been thinking about that yet. It's November 1, and that's a decision we'll be making in the first quarter of next year.
Okay. Sorry, quick separate question about inflation expectations. The Michigan Sentiment Survey showed a big jump in 1 year ahead inflation expectations last month from 3.2 to 4.2. Last year, you said that particular survey was a really decisive factor in one of your rate hike decisions. If it stays elevated next time around, how big of an input will that be into your December thinking?
Yeah, we look at a range of things. I think the thing got blown out of proportion a little bit. It was actually a preliminary estimate that got revised away, and I said it was preliminary in that, but that didn't get picked up. So we look at many things, and so really look across the broad array of surveys and also market-based estimates, and we do that really carefully at every meeting and between meetings. And it's just clear that inflation expectations are in a good place. The public does believe that inflation will get back down to 2% over time, and it will. They're right. So, and there's no real crack in that armor. You can always find one reading that is a little bit out of whack, but honestly, the bulk of them are just very clear that the public believes that inflation will come down, and that's, of course, we believe that's critical in winning the battle.
Hi, Chair Powell. Megan Casella with Barron's. Thanks for taking our questions. I wanted to see if you could talk about the neutral rate. You mentioned today that you're still debating whether rates are sufficiently restrictive, and you've recently said that evidence is suggesting policy is not too tight right now. So I was curious if you could elaborate on that at all and whether that means the neutral rate, in your view, has risen.
Yeah. So first thing to say is that it's very important. It's a very important variable in the way we think about monetary policy, but you can't identify it with any precision in real time, and we know that. So you have to just take that. You have to take your estimate of it with a grain of salt. What we know now is, within a range of estimates of the neutral rate, policy is restrictive, and it's therefore putting downward pressure on economic activity, hiring, and inflation. So we do talk about this. There's not any debate or attempt to sort of agree as a group on whether our star has moved or not. Some people think it has. Some people haven't said that don't think it has. Ultimately, it's unknowable, and so really, again, what we're focused on is looking at the data and giving ourselves a little more time now to look carefully at the data by being careful in our moves. Does it feel like monetary policy is restrictive enough to bring inflation down to 2% over time? That's the question we're asking ourselves. I think years from now, economists will be revising their estimates of R star as it existed on November 1, 2023. We can't really wait for that in making policy. We have to we have to have those models and look at them and think about them, and ultimately we've got to look at the effects that policy's having, accounting for the lags, which makes it difficult.
If I could follow up on a wages point earlier, you talked about the inflation outlook, but I'm curious if you have any concerns whether wage inflation at its current level could risk pushing up overall inflation or reacceleration.
So if you look at the broad range of wages, wage increases have really come down significantly over the course of the last 18 months to a level where they're substantially closer to that level that would be consistent with 2% inflation over time, making standard assumptions about productivity over time. So it's much closer than it was. And that's true of the ECI, which is the one that we got this week. It's true of average hourly earnings and compensation per hour too. So, and all of them are kind of saying that, which is great. And you have to look at a group of them because any one of them can be idiosyncratic in any given reading. So that's what you see. And so what you saw with the ECI reading was, if you look back comes out 4 times a year. If you look back a couple of quarters, you'll see it was much higher, and then it came down substantially in June. And then the September reading was more or less at the same level as the June reading. So in a way, it's just validating that decline. And it was very close to our expectations internally too. So I think we feel good about that. Also, I would say it isn't, in my thinking, it's not the case that wages have been the principal driver of inflation so far. Although I do think it's fair to say that as we go forward, as monetary policy becomes more important relative to the supply side issues I talked about and the unwinding of the pandemic effects, it may be that the labor market becomes more important over time too.
Hi, Nancy Marshall-Genzer with Marketplace. Chair Powell, are you now as concerned about overshooting and raising interest rates too much as you are about getting inflation down to the 2% target?
So as I mentioned, I think for much of the last year and a half, the concern was not doing too much, not doing enough. It was not getting rates high enough in time to avoid having inflation expectations, higher inflation expectations become entrenched. So that was the concern. I think we've reached now more than 18 months into this. You can see by the fact that we have slowed down, although that we're still trying to gain confidence in what the appropriate stance is. But you can see that we think, and I think, that the risks are getting more balanced. I'll just say that they're getting more balanced. The risk of doing too much versus the risk of doing too little are getting more closer to balance, because policy is clearly restrictive at 5.25% to 5.5%. That range, if you take off a mainstream estimate of the expected inflation, take 1 year inflation, you're going to see a real policy rate that is, well above mainstream estimates of a neutral policy rate. Now that's arithmetic. It doesn't really. What the proof is really in how the economy reacts. But I would say that we're in a place where those risks are getting closer to being in balance.
And you said the proof is how the economy reacts. What are you looking at to be sure you're not overshooting?
Well, I think what we're looking at is, is inflation still broadly cooling? Is it sort of validating the path we saw over the summer, where inflation was clearly cooling and coming down? Now, we've seen periods like that before, and there hasn't been follow through. The data have bounced back. So what are we seeing? Are we seeing, is inflation still coming down? So that's the first thing. Second thing is, in the labor market, what we've seen is a very positive rebalancing of supply and demand, partly through just much more supply coming online, and with labor demand still clearly remaining very strong. When you have the kind of job growth we've had over the last quarter, it's still very strong demand. So, and you see wage increases coming down, as we discussed, but coming down, in a kind of gradual way. I think we want to see that whole set of processes continue.
Brian Mena, CNN. Do you think that has been any structural change in either consumption or in the job market that's pushing up consumption? You obviously saw the third quarter GDP figures, which were strong, and some economists have expected revenge spending to have fizzled out by now. So I'm kind of wondering if there's been any structural change in consumption.
I wouldn't say there's been a structural change in consumption. I would say it's certainly been strong. And so a couple of things. We may have underestimated the balance sheet strength of households and small businesses, and that may be part of it. There may be, we've been, like everyone else, trying to estimate the amount of savings that households have from the pandemic when they couldn't spend on services really at all, or in-person services. And, there can still be more of that than we think, although at a certain point we're going to be getting back to pre-pandemic levels of savings. We may not be there yet. So clearly people are still spending. The dynamic has been really strong job creation, with now wages that are higher than inflation in the aggregate anyway. And that raises real disposable income, and that raises spending, which continues to drive more hiring. And so you've had that whole dynamic has been, and also at the same time, the pandemic effects are wearing off, so that goods availability, automobile availability is better, or was better. I think it still is. And from a business standpoint, there are more people to hire, and there's more labor supply. So the whole thing has led to more growth, more spending, and that kind of thing. And it's been good. And the thing is, we've been achieving progress on inflation in the middle of this. So it's been a dynamic. The question is, how long can that continue? And I just think the existence of this second set of factors at this time, which is the unwinding of the pandemic effects, that's what makes this cycle unique, I think. And we're still learning. Took longer for that process to begin than we thought, and we're still learning about how it plays out. That's all we can do.
So to Daniel for the last question.
Thank you, Chair Powell. Daniel Avis from Agence France Presse. Just a quick question following up on an earlier one. With regards to the Israel-Hamas conflict, the Fed's financial stability report said that Israel-Hamas conflict and the conflict in Ukraine pose important risks to global economic activity, including the possibility of sustained disruptions to regional trade in food, energy, and other commodities. You've had organizations like the World Bank warning of a possible, surge in oil prices if the war spreads to other countries in the region. I'm just wondering how the Fed is monitoring these developments in the Middle East. You mentioned they are, and just what, the potential economic impact could be if the conflict does spread to other countries in the region. Thank you.
I wouldn't want to speculate too much, but I'll just say so. Really the question there is, does the war spread more widely, and does it start to do things like affect oil prices in particular, since this is the Middle East we're talking about? The price of oil has really not reacted very much so far to this. As the Fed, as the Federal Open Market Committee, our job is really to understand the economy and the economic effects. And it isn't clear at this point that the conflict in the Middle East is on track to have significant economic effects. That doesn't mean it isn't incredibly important and something for people to, to take great, really important notice of. But it may or may not turn out to be something that matters for the Federal Open Market Committee as an economic body. But what the Financial Stability Report does is it calls out risks, and that's what it's doing, is calling out a risk of that. And the war in Ukraine, the same. The war in Ukraine, did have immediately very significant macroeconomic implications because of the connection to commodities. So, thank you.
Thank you.
Thanks very much.
Everybody, that's it. Let's unwind this one for everybody to see. Welcome, guys. We have made it again to another FOMC meeting. Welcome, Oscar here. If you haven't done so, might consider liking, subscribing. You never miss any update live, or a lot of things are going on right now, and I think we all see it. Today, many questions, the really great questions in my opinion, just to see and put out your own power, understand and get some insights, right? Because some people were saying, well, you want restrictive policy, but you are continuously pausing the rate hikes. So is that really congruent with what you're saying? And he doesn't really want to accelerate the federal funds rate, because with the 5.25 that we have to 5.50, he sees that as enough. So it's a lot, and the more he raises, the more the effects in the economy. But as of right now, I see the Fed achieving the results they've been wanting for such a long time. And he said previously how all the 75 basis points that they rose last year, finally they're taking effect, right? I don't know if you guys got that, but it's good, right? That what you did last year and what you were doing this year is finally taking over little by little by little. So I think that for a fact is going to help. Let's go to the 1 hour here on Bitcoin. So when it comes to the prices, Bitcoin didn't do much, just consolidated. But who was the massive winner for today's crypto pump? That was Solana, everybody. As you're seeing on the screen, Solana rose a lot. I don't care if it's not there anymore, because people sold. You have to understand that to become a millionaire in crypto and to become rich, you have to cash out and repeat that again and again and again. So some people did sell and made some delicious money. So kudos to everyone watching, right? And everybody who was trading, because you're seeing on the screen right now. Let's go to CoinMarketCap right here. Coin market cap as of right now, we are looking at 1.29 trillion. So it was a positive day. I will consider this a really good W for crypto and Bitcoin in the first day of October. So far, Pepe and other ones even are actually trending. I'm sure that the ones, I mean, Solana is really the one that's going to be doing fantastic with 20% in the last 24 hours and on. So this speaks volumes, and a lot of people are like waking up to the opportunities, right? Overall, with the FOMC, I'm positive, right, that they're going to be trying to achieve that 2% target as soon as possible. We have 2 more CPI and 2 more labor market readings. So a total of 4 more readings papers coming up by the other FOMC that's going to be in mid-December, right? So as of right now, we have 4.1 core inflation. It's been coming down since last year from 6.5 to 4.1. In the upcoming November for October CPI data, that's where we're going to see if we finally break down the 4% and go lower to 3%. So everybody should be excited, right? Because it will be bullish, and we love that. Now, I think it's an amazing opportunity with 680 votes to close this poll, and everybody with 76% said yes, we are expecting a pump. And as of right now, before the FOMC, we had the pump. Now, after the FOMC, we are seeing Bitcoin rally just a little bit more. So kudos to all of you, everybody. Kudos. And to everyone, I mean, a lot of questions, right? A lot of comments that, I mean, Sushi Swap, Solana, we have some really major winners today, and I think that's what matters. Guys, understand one thing. The FOMC, as you just saw today, will have its effect on crypto and Bitcoin maybe later on today or the week. But what's really gonna make everything pumping, as you know, is this. As soon as we have most of these Bitcoin ETFs approved, that's where we are gonna rise to the moon. And there's more and more different cryptos and more different companies, asset under management, that are trying to get listed, approved, and relisted, because after a bunch of different comments from the Securities Exchange Commission, right? Also, if you're just coming in here, you have to know what the SEC has done. They have arrested the founders of SafeMoon, and also they have charged the SafeMoon crypto token. So I think it goes without saying that you should get out of that project as soon as possible, right? You should get out of, I mean, I'm just saying, I think that wouldn't be a bad idea. So to everybody who is watching as well, we're gonna have a far chat with Chris Marsolek, Hong Kong FinTech Week. Him and Steve, and Eric, the CEO, that's him. They're gonna be chatting in Hong Kong on that far chat. So it's really awesome for all my Crow fam. So right now, price of Bitcoin doing well, and I can tell you guys, I'm super excited. There was a bunch of people with us today. I want to say thank you to all the super chats, which I have it right here. And thank you so much for your awesome support, for being here with me. And you see right now the price of Bitcoin is kind of going green, right? So price of Solana trying to go back. Price of Ethereum at 1,844, guys. Let's go ahead and do one day. Oh, wow. This is gonna be a nice day for lives, everybody. Price of crypto is pumping, and that's the way we like to see it. Good job, everybody. Price of crypto is pumping. That's exactly the way we like to see. And as always, guys, don't forget to smash the like button so more people come on here and chat with us, and we tell the algorithm that Oscar Ramos is just trying to do the best we can. So we're putting ourselves in the best position for an amazing rally in this upcoming bull cycle. So better and more things coming up for us, and gosh, I couldn't be more excited. So that's it, guys. I want to take a look at the comments one last time. Pakasat, thank you so much for being here. Crypto Soul, Everyday Homero, Agent 00, what's going on, my Tectonic ambassador? Happy to see you here. So, yep, we made it, and we're gonna make it. Alchemy Pay also doing well. Good stuff. Good stuff. That's nice. So, things are moving fast, everybody. And well, take a look at everything. There's a lot going on in crypto, and that's why we're here. Thanks for watching, everybody. Time for me to bounce. That was a delicious and really good FOMC meeting. I really enjoyed it. And until the next one, thanks for watching, guys. You be safe. We made it, man. That was really good. Until next one, which we're gonna have a lot more things coming up. And enjoy this one. Not at my studio, but trying to find the ways to keep everybody updated. You guys take care. Thanks so much for watching, and I'll see you next time. Peace. Let's go, guys. That was awesome.